If the U.S. really wants to make sure that the dollar remains the reserve currency, the real crippling defect right now is it's not easy to send digital dollars at the speed of light on a mobile phone, and people want to do it, so they ought to actually normalize that. And if they want to make sure that the United States owns the capital of the world, they just ought to buy 20% or 30% of Bitcoin. They'll have it all. And then when the Chinese and the Russians dump all their real estate and all their gold, and if they dump their treasury bills or whatever they dump, they'll buy Bitcoin. The price of Bitcoin will go through the roof. The U.S. will make $80 trillion. I have about $40 billion of Bitcoin. I have about $7 billion of bonds. 4.2 of them are already equity. I mean, they're already effectively equity because they're trading not just above the strike price, they're trading above the call price, which is 130% of the strike price. So we could, generally sometime in the future just call them all for equity and equitize them all. So there's about $3 billion of a convertible bond on a $40 billion structure, which is zero coupon, which there's some theoretical risk that there might be more dilutive than the minimum strike. But the other point to make is these are no recourse unsecured notes. There's no lien, there's no claim, there's no EBITDA covenants. I think we paid like 30 to 35 million in interest on 7 billion in debt, Scott, a year. But I don't even have to generate the cash flow for the 30 million. I could actually sell equity in order to pay the 30 million, and we have raised 10.5. We've been generating $1 billion of equity a week. I mean, $1 billion of income and equity a week. So the real magic of this is you need an asset which is going to outperform the S&P, that's also going to stay more volatile than the S&P, and then you need a company, a public company that's 100% Bitcoin. And when you sell securities backed by Bitcoin, you need to buy the Bitcoin with it. And because you're actually feeding back the capital back into the system, it's like a triple amplifier because it's driving up your assets, it's driving up your volatility, and it's driving up the price of Bitcoin. Look, Scott, the point is, if you put 100% of all your wealth into our bonds or into our equity and a Bitcoin goes to zero, then you will lose money.
And you're not suggesting anyone does that. Yeah.
And then if you ask the question, well, how does MicroStrategy look at it? My answer is I'm selling the volatility. So for example, if I sell $1 billion bond, I'm capturing an 80% spread up front. So I'm making $800 million in Bitcoin. If Bitcoin crashes by 80%, then I was neutral, right? So if Bitcoin went to 20,000 tomorrow, you could say, you didn't make any money on that. But if Bitcoin doesn't crash 80%, I made 800 million. Now, if Bitcoin goes down 20 or 30 or 40%, Bitcoin's volatile. My stock is twice as volatile. I'm going to refinance it and sell the volatility, and the theoretical value of having $1 billion of volatile asset is like 100 million a year. Like for example, all I have to do is hold the $1 billion and then sell the vol, and we probably make another 500 million to $1 billion, even if Bitcoin doesn't go up, even if it goes down. So it's a no-brainer for us as a corporation because we're getting the float and we're getting the volatility, and then we can equitize or refinance the volatility between now and when it comes due. If you want me to say, what's the doomsday scenario? Well, it's the same scenario you have, Scott, which is if you walk out your door and you get hit by a truck or a meteor, you're dead. So it is possible you could get hit by a meteorite and then you're dead. And it is possible for an extinction level event to happen to Bitcoin, a meteor. And if it does, everything is definitely levered to that. But if it happens, it needs to happen quickly, immediately. Like, for example, if Bitcoin goes to zero tomorrow forever, without incontrovertibly, right? That's not good for our business. But if Bitcoin simply trades down and stays volatile, if Bitcoin was cut in half and stayed as volatile, well, there's a lot of people that will want to buy MicroStrategy stock and MicroStrategy bonds, and they'll want to buy. If Bitcoin was 50,000, there would be a massive demand for people for a convertible bond struck at 50,000 for people to ride the upside and avoid the downside of that, and we would sell that one, you see. So our business kind of works no matter what happens, as long as Bitcoin continues to be interesting, volatile.
From a person you learned about Bitcoin, started studying it.
Wasn't the more important question, why is it interesting to everybody else on the earth?
Sure.
Right? There's 650 million crypto people. It's the center of 650 million crypto people. There's 1,500 crypto exchanges you can trade it on. Any company on earth can trade with any other company with Bitcoin. It's on Saturday afternoon, if you wanted $1 billion of credit, it's the only place to get $1 billion of credit. If you wanted to panic sell or take $1 billion short position because of an Israeli missile crisis, it's the only thing you can sell $1 billion of. And on Sunday morning, if you want to reverse the trade, it's the only way to reverse the trade, right? NVIDIA's not trading on Saturday. I mean, think about by the way, Bitcoin is the 7th biggest asset in the world by market cap. It's $2 trillion. But think about the ones above it. Microsoft, Apple, right? NVIDIA.
Yep.
These are not useful or interesting to most of the world. No Chinese company is going to capitalize on NVIDIA stock. Gold's at the top. You can't move $10 billion of gold from New York to Tokyo or short it or go long. So literally what I do is turn it around to you and say, if you don't think it's the most interesting, tell me what asset in the world is more interesting right now to more people, because I don't think you can name one.
Well, I think it's interesting because of all of the conversations that it sparked and the way that it's become very political, and it really brings out the emotions of everyone involved, either positive or negative. But the things that you mentioned there about why it's interesting, like, again, a lot of it has to do, I mean, you mentioned the fact that it trades on weekends, which other assets don't, but the idea that it is...
Ed, come on. First of all, the number one performing stock in the S&P 500, mine.
Yeah.
We're up 30x.
Yeah.
That's 3 times more than NVIDIA. That's interesting. How about the number one options market in the S&P 500? Mine. We have the most intense options, like 130% of market cap. The most profitable convertible bond, the number one convertible bonds in the marketplace, MicroStrategy.
Yeah.
Right? It's interesting because people are making money off of it.
Right.
Everybody in the world. $2 trillion of market cap or of wealth has been created in 48 months for hundreds of millions of people. It's changing every minute of the day.
But in that sense, isn't what's interesting that the price is going up? Because you said, you know, it's nice when the price goes up, but what I'm also hearing is the interesting part is the price going up, the fact that it has become such a valuable asset class. And I guess my point would be, if there comes a time when the price starts going down, suddenly it's not so interesting anymore. And then I feel that it could all of that fire that you described can sort of poof a lot more quickly.
By the way, it was pretty interesting when it went down too. I give you the crypto winner. It's interesting because it's useful. It's useful because it's the hardest money in the history of the human race. Right? It's interesting and useful because it represents property rights and monetary security or economic security for 8 billion people. It's interesting in the same way that electricity and clean water and steel and airplanes and fire and nuclear power are interesting because it's the single biggest way to improve your quality of life, right? And otherwise, it's interesting because it is a global, real time. It's changing all the time, every second. It's literally changing. Now, think about all the other financial assets. Conventional wisdom says I create diversified portfolios of bundles of 20th century things like 187 real estate apartments, or a bundle of preferred stocks, or a bundle of corporate bonds, they have no volatility because they're engineered literally to be uninteresting. They're literally engineered so that on Saturday afternoon there is nothing that could happen that would change their value to you. So you see, the fact that Bitcoin is engineered so that it does change value, someone is doing something. If you hold $1 or hold $1 million and you're wanting to hold it for 30 days, you're getting SOFR, the 30-day SOFR rate. You're getting about 4.8% interest. If you actually hold $1 million of the S&P index and you sell the call 30 days out at the market, you're getting like 15% interest. If you're holding $1 million of Bitcoin, IBIT, and you sell the 30-day call, you're getting 100% interest. And when you're holding $1 million of MicroStrategy and you sell the call, you're getting 220% interest. So when I say interesting, I'm using the classic sense. People are financially invested in it, and therefore when it changes, there's hundreds of millions of people that all of a sudden feel it up or down. I'm also pointing out you can literally generate more interest on this thing. And there are more ways to actually make money on it. And that's why the ticker's on CNBC. CNBC's not showing you things that aren't interesting. They're not showing you the soybean price every day. They're not showing you, they're not going to show you the price of a diversified portfolio of real estate assets that are maturely and scientifically constructed, because the construction of the portfolio was to make it boring. And Bitcoin is, and when you make it boring, you strip the performance out of it. And so the point is, let's come back to fire. Volatility is fire. If you're a normie, you run away from fire. If you're Henry Ford, you put the fire into an engine, you put it in a horseless carriage, and you create an automobile, and now people can go. And then you put it into a plane and a train.
That's good.
So engineers are putting volatile, you're a nuclear reactor in the spaceship. It's scary in the submarine. But Bitcoin is like the financial fuel. These things are crypto reactors. It's a technically better way to do this, and it's the volatility that's actually the motor that's driving the portfolio or the treasury forward. Bitcoin is capital. Bitcoin is not currency. Gold has been used as capital. It's not currency anymore. The very simple thing that the U.S. ought to do is they ought to sell the gold and buy Bitcoin with it and buy 20% of the Bitcoin network. It's very simple. Just swap the gold for Bitcoin. If anybody actually swaps out their treasury bills for Bitcoin, then the U.S. is going to own it all. It's kind of like just getting Alaska or the Louisiana Purchase for free. They could pretty much have 20% of the network for free overnight just with a swap. They could even print the money. I mean, they could buy it for next to nothing. The only alternative to the treasury bill for anybody is Bitcoin. And so just do that, and Bitcoin becomes the world reserve capital network. So if the U.S. really wants to make sure that the dollar remains the reserve currency, the real crippling defect right now is it's not easy to send digital dollars at the speed of light on a mobile phone, and people want to do it. So they ought to actually normalize that. And if they want to make sure that the United States owns the capital of the world, they just ought to buy 20% or 30% of Bitcoin. They'll have it all. And then when the Chinese and the Russians dump all their real estate and all their gold, and if they dump their treasury bills or whatever they dump, they'll buy Bitcoin. The price of Bitcoin will go through the roof. The U.S. will make $80 trillion.